Welcome back to Alpha Recap, the quick, clear market wrap from stockalpha.ai. Nate here. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Thanks for having me.
Big day in the markets today. Everything finished higher after the close. Tech led, but it wasn't just a narrow rally. Walk us through the headline numbers.
Yeah, absolutely. The major growth-focused index finished up about 3.5%. The broad large-cap benchmark closed up about 1.7%. And small-cap exposure finished up roughly 3%. So it was broad participation, not just a tech-only move.
That breadth is the story, right?
Exactly. When big-cap tech runs and small caps also advance, it suggests buyers were willing to take on risk across the board. Analysts note that pairing of long-duration growth leadership with small-cap follow-through can precede broader rallies if it keeps happening.
So, what really stands out here is the AI theme. It felt like every tech headline had an AI angle.
Yeah, that tracks. Renewed investor appetite for AI-related earnings and investment narratives powered a lot of the outperformance. Companies talking about cost discipline, cloud traction, and ad recovery, those were the ones that drew the most interest.
Hold on, say that again? Cost discipline matters again?
Right. And the other thing is cost discipline. Plus, improving monetization of AI projects reduces the guesswork on future profits. Data suggests that when investors see both investment and returns on AI, they reward those names more aggressively.
Rates also stayed calm today, which helped, I imagine.
Correct. Treasury yields were largely steady on the session, which removed a common headwind for long-duration growth stocks. With yields not spiking, investors were willing to bid up higher multiple names. And there was steady corporate news flow, dividend moves, coverage initiations, and some IPO chatter that created constructive headlines across sectors. The mix supported both tech leadership and rotation into cyclicals.
Quick reactions. Big tech up, small caps up, yields steady. Big move.
Big move.
Let's dig into sectors. Tech and communications led the charge. Who was in focus there?
Within tech, the stocks tied to AI, cloud infrastructure, and digital advertising were most prominent. Communications and media got a lift from streaming news and deal chatter, which helped sentiment across that group.
And financials were mixed, right?
Yes, finance and banking showed pockets of strength where loan demand or underwriting metrics looked better than feared. But it wasn't uniform. Some names held back while others contributed to the overall advance.
Energy and materials. Patchwork day?
Exactly. Commodity-sensitive names reacted to daily flows and mining headlines. Utilities showed selective strength tied to renewables and storage momentum. Investors are still keeping an eye on energy transition themes.
Real estate had a lift too from a loan disclosure, right?
Yes, a disclosure about a $220 million loan helped parts of the real estate complex that rely on leasing improvements. That was one of those concrete pieces of news that traders liked.
Cannabis was noisy today. Lots of headline-driven swings.
Yeah, cannabis names were volatile. Policy clashes and PR activity produced idiosyncratic moves rather than broad sector leadership. Those stocks tended to swing intraday as traders parsed the implications for legalization timelines and market access.
Short reaction? Not what anyone expected.
Honestly, I was a bit surprised by some of the intraday reversals.
Okay, let's talk about the big corporate stories that helped move the tape.
Meta featured prominently as analysts debated the pace and profitability of its AI investments. Commentary that Meta was navigating an AI investment cycle, balancing capital expenditures and monetization, helped lift the stock and contributed to the growth index's strength.
Caterpillar announced a dividend increase, right?
Correct. The industrial giant raised its dividend by about 8%. Market watchers read that as a sign that cash flow and board confidence were healthy in parts of the industrial cycle, which helped cyclical names and supported small and mid-cap interest.
Travel and leisure. Carnival had activity ahead of earnings.
Yes, Carnival and related leisure names saw idiosyncratic flows as traders positioned ahead of second quarter updates. Forward bookings and yield trends tend to drive those moves.
Oracle got some analyst attention too.
RBC Capital kept coverage steady, noting mixed results across cloud and legacy businesses. Analysts highlighted relative stability in Oracle's cloud segment, which factored into enterprise software discussions.
PepsiCo and consumer staples were debated.
Exactly. One firm initiated coverage at a market perform level, which sparked debate about defensive positioning versus the secular growth trade. These coverage calls can influence how investors think about rotation between staples and cyclicals.
There was also chatter about a SpaceX initial public offering.
The SpaceX IPO talk definitely reverberated. While the direct impact was more thematic than immediate, IPO speculation lifted some aerospace and satellite-related supply chain names. It's the kind of story that can add a speculative bid during constructive sessions.
Got it. Now, pivots to the Fed. You cleared your throat earlier for this.
The market's tone was shaped in part by steady yields and mixed inflation reports. Traders interpreted the data as not materially increasing the odds of a more aggressive near-term tightening cycle, which provided relief for growth and AI plays.
But the Fed is still data dependent, right?
Absolutely. What matters next? The inflation path and Fed commentary. Mixed inflation prints showed sticky components in services and shelter, while some goods price pressures eased. Analysts emphasized that if core services stay sticky, the Fed would remain vigilant.
So the market priced a lower chance of an immediate policy shock. But that could change fast.
Yes, a hotter-than-expected inflation print or a hawkish shift from Fed officials could reprice rates quickly and compress valuations on growth-sensitive stocks.
Technical picture. Breadth improved today. What did the charts say?
Momentum indicators improved intraday, and several sector exchange-traded funds broke short-term resistance. The fact that the small-cap benchmark rose alongside the big tech index suggested money rotated from defensives into both big-name growth and cyclically exposed small caps.
Traders will watch for follow-through, right?
Exactly. Analysts note that one strong session doesn't guarantee a multi-week uptrend. Follow-through buying, flows into exchange-traded funds, and options positioning will influence durability.
Quick pause here. What are the key things to watch heading into the next session?
Incoming economic prints, especially any new inflation or employment data. Fed comments and regional officials' remarks. Continued earnings and guidance flow, particularly from technology and cyclicals. And Treasury yields. Even modest moves can reprice tech valuations.
And sector-specific catalysts?
Yes, SpaceX IPO details, cannabis policy updates, and renewable energy announcements could all create focused volatility in those areas.
Let's wrap with historical context in a sentence or two.
A day where the growth-heavy index rallies north of 3%, while small caps also rally is notable. Historically, that combination can precede broader risk-seeking behavior. But it's asymmetric. Good macro or dovish rate expectations can extend gains, whereas unexpected inflation could prompt sharp reversals.
Final takeaways. Hit me with 3 quick ones.
1. It was a clear risk-on session led by tech and AI optimism, with meaningful participation from smaller caps. 2. Calm Treasury yields reduced pressure on long-duration growth names. That was a key enabler. 3. The market will need follow-through and benign inflation prints to sustain this move. The Fed remains data-dependent.
Perfect. Quick reactions. Solid day. Stay alert. Watch inflation prints.
Right. And remember, analyst comments reflect market observations, not personalized advice.
That's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. See you next time.
Thanks, everyone. Nate signing off from Alpha Recap.